Hi and welcome to the LM Report. I'm your host, Lima, and today is April 12th, 2025. In this episode, we're taking an in-depth look at President Trump's ambitious economic policies, unpacking how his strategies on trade, energy, government reform, and financial trends are poised to reshape the U.S. economy and influence global markets. From tariffs to manufacturing to rising gold prices, we'll explore what these developments mean for American families, businesses, and the international community. Grab a seat and let's dive into the details. Trade and tariffs. Reviving American industry. President Trump's trade policy centers on a robust tariff framework targeting imports from over 75 countries, with a spotlight on major players like China, the European Union, and parts of Latin America. The logic is simple yet bold. By increasing the cost of imported goods, think electronics, clothing, or car parts, tariffs make it more economical for companies to produce in the U.S., spurring job creation and strengthening domestic industries. It's a strategy rooted in economic nationalism, aiming to reverse decades of manufacturing decline and bring factories back to American soil. Early indicators suggest it's gaining traction. Take Novartis, a global pharmaceutical leader, which recently committed $23 billion to build 7 new facilities in states like Florida, Texas, California, and New Jersey, with plans to expand existing sites in San Diego and beyond. This investment is expected to generate 4,000 jobs, from construction crews laying foundations to skilled workers operating cutting-edge equipment. Other sectors, including automotive, textiles, and consumer goods, are also showing interest, with companies like General Motors and smaller manufacturers exploring U.S.-based expansions to sidestep tariff costs. But tariffs aren't a magic bullet. Critics highlight the risk of higher consumer prices as imported goods become pricier. For instance, a tariff on Chinese-made electronics could bump up the cost of smartphones or TVs, hitting budgets hard. To address this, Trump's team is rolling out countermeasures, slashing energy costs to lower production expenses and proposing tax cuts to boost disposable income. The idea is to cushion any price hikes while encouraging companies to relocate. Economists are split. Some see a manufacturing boom, others warn of trade wars, but the administration is betting on long-term gains over short-term pain. Energy independence, powering prosperity. Energy policy is a linchpin of this economic vision, and recent data shows it's delivering. In March 2025, consumer prices dipped unexpectedly, thanks to a 2.4% drop in energy costs, including a 6.3% plunge in gasoline prices. This isn't luck. It's the result of deliberate moves to ramp up domestic oil and gas production, ease drilling regulations, and secure higher output from global suppliers like OPEC. Cheaper fuel means more money in Americans' wallets, but the benefits go deeper. Lower energy costs ripple across the economy. Manufacturers spend less on running factories, truckers save on diesel, and airlines cut ticket prices, making travel more affordable. Retailers, too, can keep shelves stocked without passing on high shipping costs. For example, industries like steel production and chemical manufacturing, which guzzle energy, are becoming more competitive globally. By prioritizing energy independence, Trump aims to neutralize tariff-related price pressures and lay the foundation for sustainable growth. Environmental groups raise concerns about fossil fuel reliance, but supporters argue that affordable energy is critical for economic revival. Monetary policy, the Federal Reserve's tightrope. The Federal Reserve sits at a crossroads, balancing Trump's economic moves with its own mandate to control inflation and unemployment. Recent trends, falling inflation and rising job numbers in sectors like construction and retail, suggest conditions for cutting interest rates, which would lower borrowing costs for mortgages, business loans, and credit cards. A rate cut could turbocharge growth, letting families buy homes and entrepreneurs expand. Yet the Fed is cautious. Tariffs could disrupt supply chains, potentially nudging prices up in niches like imported raw materials. Fed officials, in recent statements, stress a data-driven approach, watching metrics like wage growth and import costs. If inflation stays low and jobs keep climbing, they may have to act, but they're wary of moving too fast and reigniting price spikes seen in 2022 to 2023. This dance between fiscal policy, tariffs, tax cuts, and monetary policy, rates, liquidity, will shape whether 2025 brings a soft landing or turbulence. Gold, Bitcoin, and financial shifts. Financial markets are buzzing with another trend. Gold prices soaring past $3,200 per ounce. Gold's appeal as a safe haven grows when trust in paper currencies wavers, and its climb reflects investor caution amid trade tensions and global uncertainty. Meanwhile, states are eyeing alternatives. New Hampshire's HB 302 bill, if passed, would let the state invest in Bitcoin, a first-of-its-kind move that could inspire others. Bitcoin's decentralized nature appeals to those seeking hedges against inflation, though its volatility sparks debate. These shifts tie into broader questions about money's future. Gold and crypto aren't just assets, they're signals of eroding faith in fiat systems. States like Texas and Utah are also promoting gold-backed accounts, arguing they protect against currency devaluation. Critics call it fringe, citing crypto's wild swings and gold storage costs, but advocates see a buffer against economic storms. For now, it's a side story, but one that could grow if trade policies shake global finance further. Government reform, streamlining for efficiency. Trump's team, with advisors like Elon Musk, is tackling government bloat head-on. The mission, wasteful spending, shrink redundant agencies, and redirect funds to high-impact areas like infrastructure and tax relief. Think of it as a leaner federal machine, fewer bureaucrats, more builders. The Department of Education, for instance, faces scrutiny, with test scores flat despite ballooning budgets. Similarly, the U.S. Postal Service keeps hiking stamp prices, from 73 to 78 cents soon, yet service lags. This isn't just cost-cutting, it's about reallocating talent. As agencies downsize, workers can pivot to private sector roles, especially in manufacturing. New factories need welders, coders, and managers, and a streamlined government frees up labor to meet demand. Detractors warn of lost safety nets, but proponents say a thriving private sector lifts all boats. The transition won't be seamless, retraining takes time, but the vision is a workforce producing, not pushing paper. Climate research, a contentious pivot. Funding for climate research, particularly at agencies like NOAA, is under review with potential cuts looming. Supporters of the move argue that resources should prioritize immediate needs: roads, factories, jobs, over speculative models. They point to past climate predictions that didn't pan out, questioning ROI. Critics counter that gutting research blinds us to risks like rising sea levels or crop failures, undermining long-term security. This debate mirrors broader tensions: growth now versus resilience later. The administration leans toward the former, betting that economic strength equips us to adapt. Yet, scientists urge caution, noting climate shifts don't wait for GDP to catch up. Both sides have merit, and the outcome will shape how America balances progress with preparation. Europe's dilemma, trade and tensions. Across the Atlantic, the EU faces a tariff-induced squeeze. Nations like Germany, France, and Italy export heavily to the US, and higher tariffs threaten factories, jobs, and growth. Leaders are scrambling to negotiate, offering concessions like buying US liquefied natural gas to soften the blow. But cracks are showing. Protests in Lisbon, Warsaw, and Madrid signal public frustration, while debt-laden economies strain under energy price spikes. The European Central Bank, hamstrung by low rates and high deficits, has few tools left. Countries like Ireland and Luxembourg brace for export hits, while Italy and Spain fear unrest if costs soar. Trump's 90-day negotiation window adds urgency: cut a deal or face steeper tariffs. Some EU states may break ranks, prioritizing bilateral US ties over unity, which could fracture the bloc. It's a high-stakes chess game, with America holding stronger pieces for now. The road ahead: opportunity and uncertainty. Trump's blueprint, tariffs, cheap energy, lean government, is a bet on American resilience. It's yielding results: falling prices, job growth, factory plans. But risks linger: trade spats, price blips, global pushback. Success hinges on execution, keeping inflation tame, workers trained, and allies on board. The vision is bold, factories humming, wallets fuller, power restored to the people. Whether it delivers depends on navigating a world that's watching and not always cheering. That's today's LM Report. If this deep dive sparked your curiosity, hit like, share, and subscribe for more clear-eyed takes on the issues shaping our future. Your support keeps us going. Until next time, stay sharp, stay safe, and stay prepared. Thanks for joining me.